it's extremely important to keep cross-verifying your personal information in your credit report. There is enough chances of your credit, your personal information getting misreported by any of the banks while you apply for loans, or data, mismatch error happening.
Which is random people ka data coming to your account.
Absolutely. Imagine me having one written off account, which is not mine.
Yeah.
And which is blocking me from getting a loan.
So let's get started with the topic of the video.
Yes.
Which is improvement.
Right.
So someone realizes ki boss mera CIBIL kam hai, kharab hai.
Right.
It's bad, it's low. Blind loans are getting rejected.
Right.
What should be the first action he should take?
A lot of people have low CIBIL scores.
Okay.
A lot of people do not have an understanding of how to read the report, what a credit report is,
okay,
what a CIBIL score is, or a credit score is.
Okay.
That is the major blocker, that comes, when it comes to improving one's CIBIL score, right? No, when I do not have an understanding of what a credit report is or what a credit score is,
right?
How do you expect me to improve my credit score, right? No, first of all, you require an understanding of what it is before getting into the process of improving it,
right?
So let's again, delve into what is it before delving into what you can do to improve it. A credit score is a sum total. It gives in terms of number as to how you are transacted in the past, or how we have serviced each one of your loans in the past. Okay, that's the sum total. When you access your credit report, there are 3 sections in your credit report. First is your score, which is a summation of all your activity of 3 years, 36 months, which comes in the form of score, which ranges from 300 to 900. Second is your personal information. Guys, it's extremely important to keep cross-verifying your personal information in your credit report. There is enough chances of your personal information getting misreported by any of the banks while you apply for loans, or data, mismatch error happening.
Which is random people ka data coming to your account.
Absolutely. Imagine me having one written off account, which is not mine.
Yeah.
And which is blocking me from getting a loan.
Guys, if you don't know what written off account is, again, we've done a detailed video on written off. You can check it out. The link will be
Absolutely.
Right here.
Yes.
But yeah, please continue.
Yeah. So keep verifying, your personal information in credit report. The first section is your score. After that, it's personal information, which contains name, your PAN card details, your address information, your contact numbers, your email addresses, your employment status, wherever you're working, your passport number. These are the personal information that gets reflected or being reported by banks wherever you would have applied for loans. Okay, please keep cross-verifying. That's one aspect. Then comes the account information, which gives the entire details of the loan account. Okay, it contains first is the product. If I have a credit card from ICICI Bank, it's bank name ICICI Bank. Then what is the product? It's a credit card. Then what is the credit limit, which is 1 lakh rupees? What is the overdue, which I have used around 25,000 rupees? Current balance, which is again the remaining, which is the current balance if you subtract 25,000, 75,000 rupees. Okay. Then the major flag, the major aspect that we need to check is credit facility status.
Okay.
Which reflects the status of the account.
Okay.
So there are multiple statuses. Okay. One is written off. Written off clearly states that I'm not paying.
Some loan you have not paid and bank has just written it off.
I haven't paid, or I have defaulted on that particular loan account. Or it also states that I have not been paying from past 6 months. After 6 months, it gets written off. Minimum is 6 months. Maximum can be anything. It might be 10 years, 20 years, 5 years, whatever. Haven't paid. Okay. Next is open, which is a running account. I'm taking credit and paying it back. It's a running account. closed, account closed. I've paid everything, close the loan account. Next is account sold.
Okay.
Okay. Here the account has been sold to someone else.
To a third party collector or whatever.
Third party ARC. They're called account restructuring companies.
Okay.
For example, I have a credit card, haven't paid, defaulted, gotten into written off. Then the same bank would have pooled all the written off accounts and sold it to someone else. So only ARC has the license to acquire all these written off portfolios. So there it reflects as account sold.
Okay.
So if I have to close this particular loan account, I have to reach out to the ARC, which has bought the portfolio from this particular bank. That is one of the status. Post written off settled, which we have discussed. First it was written off, then the borrower has come and settled the account. Settled, wherein I haven't paid the full amount. So these are the different credit facility statuses,
Okay.
which we need to be aware of, so that if any of these flags block you from accessing credit in future, any sorts of products. For example, if I have a written off account, I cannot access any sort of credit.
Okay.
Nobody will approve my loan
Okay.
in future. Okay, that means this particular written off account is blocking me from accessing credit.
Correct.
Even if I have a good score.
Is that possible?
Yeah, absolutely. So guys, please understand, you can have a written off account and you can also have score beyond 750.
What are you saying?
Yeah, absolutely. So for example, I have one written off credit card.
Okay.
So which was written off, let's assume, 5 years back or 6 years back. Okay. Now after that, I have, during that period itself, let's assume I had 5 credit cards, out of which one was written off.
Okay.
Another four credit cards are there.
Uh-huh.
And let's assume I had also one personal loan. I would have also taken one housing loan. Okay. Now CIBIL, to calculate the score, algorithm takes the activity of only past 36 months.
Oh, so
Yeah.
the old written off will appear in your report, but
Appear in my report, but won't make an impact in terms of calculating the score.
it will still block your ability to take
Absolutely.
credit.
Absolutely.
Okay. Interesting.
Yeah. So for example, all these six or seven loan accounts are building my credit score.
One of them is just
just written off.
That's like a blocker.
Blocking my access to credit.
How many cases like this have you seen?
Multiple ones. Somebody having a good credit score comes to us stating that, boss, I am unable to access credit. My home loan got rejected. See, most of the cases that comes to us are home loan rejections.
Okay.
Right. So they would have got, even with written off, a couple of them will approve in certain cases, having good relationship with manager. 1 lakh, 2 lakh rupees, you can anywhere get approved.
Okay.
With a good relationship. But you cannot approve, you cannot get access to housing loans because the exposure is on the higher side. Right? No, if you have to take a housing loan here in Bangalore, you need at least 50-60 lakh rupees.
Correct.
So they will not approve. Right? No. So guys, please understand, you can, even with written off flag in your report, you can still have a good credit score. Upwards of 750, because the activity that gets consumed by the algorithm is of past 36 months. If you have good activity in from previous 36 months, it will definitely have a good score. You will definitely have a good score, right? No, with written off account. So this is one section, account information. Please be aware of all the aspects. We have done several videos on each one of these aspects from an account information perspective, and your score gets calculated on the basis of how you are managing your loan accounts.
Okay.
Right. No. The third section or the fourth section, including your credit score, is your enquiries. So this section reflects the loan enquiries or the loan applications you have made with different banks.
Okay.
Let's assume I have applied for loans at 10 different banks.
Okay.
All the loan enquiries will reflect in this particular section.
Guys, this also impacts the CIBIL score.
Yes.
We'll be talking about this in details a little bit later. But yeah, please continue.
Right. So here in this section, the calculation is application to approval ratio.
Oh, okay.
Yeah. They calculate, for example, I have applied loans at 10 different banks. So you should also have loan account information upwards. No? Right. No, you yourself can straight away calculate.
Yeah.
I have applied for credit card. Is it approved? Then it will become, then
A loan account.
the loan account will get immediately created.
Right.
No? For example, if I've applied, for credit at 10 different banks and you don't see anything in the loan accounts, then that means all the 10 accounts have been rejected.
Correct.
No applications have been rejected, which straight away impacts your score. So this is another aspect. So from a credit score perspective, so I'll start pointing one at a time. From a credit score perspective, how you service first and foremost thing is how you service your loan accounts.
Okay.
For example, if you have a credit card, are you paying the overdue within the due date? So this is how credit card works. It has two different dates. One is billing date. The other one is due date, within which you have to pay the overdue, whatever you have taken.
Correct.
Or at least the minimum balance, which is a trap.
We'll be talking about this in a future video, so do subscribe for that.
So
But
guys,
yeah.
minimum balance is a trap. Please understand.
Yeah.
Design, very, very, technically and I scientifically designed by whoever, by a psychologist.
Sure.
It's
Yeah.
scientifically designed to trap people.
We'll be doing a full video on minimum balance.
Minimum balance.
But yeah, please continue. So how have you serviced your credit card account?
If it's a credit card, are you servicing it month on month by paying either the overdue, the entire overdue, or at least the minimum balance?
Okay.
Then no late payments get reported. So your DPD comes into picture, days past due. So if you have taken personal loans, then largely 5th of every month EMI becomes due. Are you paying your EMI on time? 5th of every month, are you paying your EMI on time? Then zero DPD. If it's housing loan, EMI on time. If it's vehicle loan, EMI on time. So this is one most important aspect is DPD, which is paying EMIs or your overdue when it comes to credit card on time. Okay. Next is if it becomes overdue, if it crosses the due date, when are you paying? How many DPDs? 30 DPD, 60 DPD, 90 DPD is NPA, non-performing asset. It's a clear red flag for a bank. Then your score immediately gets impacted.
Okay.
Then it clearly reflects the credit bureau that this individual or borrower is in trouble in terms of his finances. As in how the DPD goes up. They clearly, and after 6 months, when it gets marked as written off, then again your score goes down. 180 days written off, that means borrower has defaulted on his loan account. It's a clear,
it's a break.
It's a break. It's literally a break and a clear red flag for a credit bureau also.
Yeah.
Then they clearly red flag it. They clearly, block him from accessing further credit by, marking it as written off. So this is one important aspect in managing scores. Second aspect comes in. This has a major weightage. Paying the due within the due date. This has a major weightage.
Okay.
From an algorithm perspective. Second weightage is put on the category of the loans that you have taken. So there are two kinds of loans that you can take.
Okay.
One is unsecured. The other one is secured.
Oh, so I'm assuming unsecured has a negative effect?
Yes, if you have too many unsecured loans.
Okay.
Risk is on the higher side.
Correct.
See, when it's unsecured, it's not collateral backed. Right?
So having too many credit cards is bad.
Absolutely.
Wow. Okay.
Absolutely.
This is one of the questions we're going to talk about it. But
Yeah.
okay.
So the two categories, secured and unsecured. Unsecured risk is very high because if one defaults, there's no collateral to take over. So secured is basically secured by collateral. If somebody defaults, then the bank can take over the collateral. If the category of unsecured loans is very high, then it's high risk.
Okay.
Risk is on the higher side. Even if you are paying on time,
it's still considered bad.
It's not still considered bad. If the mix of credit card is on the higher side and your credit utilization ratio is on the higher side, then your score gets impacted. To have a good score, it's good to have a mix of both secured and unsecured loans.
Okay.
But what is really important is paying on time.
Okay.
And second aspect and third aspect is do not apply for loans left, right, and center. Okay, which shows distress.
Okay. So no one wants to give money to someone in distress.
Absolutely. When
Actual पैसा तो लोगों को distress में चाहिए होता है यार.
चाहिए, but when one is desperate, nobody wants to help.